Alrighty traders, George here. Time for a quick recap of the week. For starters, on the day trade front, finally printed some red ink for the 3 mornings here at a whopping minus $36 after commission. So saw a lot of paper cuts on that Tuesday and put up some green on Wednesday and Thursday. But all in all, for just 6 hours here, there was actually quite a bit of chop in the markets and some volatility in these early morning hours here, and that's just what happened with the DSR model. So since the middle of July, where I had a break-even week, coming out of that break-even week, I've had a consistently profitable week every single week since running the live room. 3 days, trading about 2 to 2.5 hours a morning there, and all of that's literally driven off of trading what the DSR model shows for those setups and signals, especially those classic 5 that I've been teaching. Anyway, this week happened to print some red ink, so there you have it. Even with some challenging market conditions, able to mitigate losses there, which is pretty fantastic to have that many consistent winning weeks. That's the most that I've ever had right there. But that is now in the red ink by a whopping $36 after commission. So let's move on to part 2 here. Earlier in the week, the balance beam setups. I sent out some of the standard setups in 2 key markets, the S&P and oil. And what I'm going to do here for time is just to pull in a graphic of the video that went out. Here's the graphic here for the trade setup. I'll let you refresh as you need to if you want to look at that again. And ditto here for the S&P. That's the trade scenario that I spelled out there. And here is what happened for the S&P. It actually did 1 for 3 out of the setups and booked a 1-point loss. Booked a -5 and a -3 based on the trade strategies that I spelled out. I want to make mention though that the short entry point that I called out had moves of 4, 7, 7, 6 and a target 1 hit on the passes that it's made through that short entry point. But the filters that I gave you guys would limit those extra entries there and have stops coming down to book losses on the only 2 entries allowed there. To the long side, at the end of the week here, we got a long that triggered, went in favor, and closing out at the end of the day picks up 7. So that prints a -1 there. That's what happened with the S&P. Oil triggering a long, stops coming in to book a 25 tick loss. Then the short setup, which made an absolute beeline to target 3 here. The stop strategy I gave you kept you in the mix all the way to target 3. The low was at 36.12. The target I had was at 36.14. And look at the reversal it made when it hit that on a dime. It completely upended that sell impulse and actually traded higher. The exclusion filter that I gave you guys kept you out of being long and short here until you went long here to book a loss of 15 ticks on trails, and then a loss here of 15 ticks on trails as well. I also want to make mention that with this price action breaking down here, that it actually did fill to target 1, and on a recovery here it filled to target 1 on the upside. And notice what happened with price when it got there. It literally bounced on a dime, showing how powerful they are in the future, traders reacting at them. All in all, this did 1 for 4, 97 ticks, 970 per contract. So in the money on these 2 setups for the balance beam. You can use this exact same model that I've used for all of these big picture calls. It's the balance beam model. Use the link at the bottom of the video and you can get some more information on that. There's your recap for the week, and I'll see you back in the training room.